Alright, what's up, you guys? In today's video, I'm going to be going over my A plus setups and my top 5 trading rules that helped me receive six figures in payouts from prop firms. If you guys don't know, I'm going to start to live trade on YouTube every day starting next year or starting January 5th. I think the 5th or the 6th, next Monday. Anyways, I posted on YouTube that I was going to start live trading on YouTube, and someone commented, oh, don't do it because you're going to have a lot of pressure and you're going to be forced to take trades. Now it's just like the point of me trading live on YouTube is to show you guys my process and show you guys that in order to get payouts with prop firms, you don't need 100% win rate. You don't need an insane trading strategy. You just need to know what your A plus setup is, and you need to follow certain rules. Everyone's is going to be different. I'm just going to be talking about mine, starting with my A plus setups. Okay, if you guys don't know, I do trade supply and demand. And I don't trade supply and demand like most people do. Okay, and you'll see what I mean by that. Okay, so the first setup that I love and I trade the most is called, or I call it, a supply and demand breakout. Okay, so basically what this is, and you could also call this a break and retest because that's really what it is. But basically, what this is when the market breaks past a supply or demand zone, basically disrespecting the zone. Okay. So, yes, usually when people trade supply and demand, it's like, oh, it taps into a supply zone, so I'm going to sell from there. But to me, what I do is I mark the zone, and then each zone is going to have this dashed line. This dashed line is the what I call the 50% line. Everyone calls it something different. I've heard people call it equilibrium, da da da. I don't know. I just call it the 50% line. Okay, boom. That's what this dash line is. And the way I take these trades is I wait for at least a 1 minute candle close or a 5 minute candle close above or below a 50% line. Then on the next, once I get that candle close, on the next candle, I want to see it retest the 50% line or the whole zone itself, right? Or a white line, which to me, my white lines are they're just support and resistance lines. Okay, that's really what it is. Also, if you guys want this PDF, the link is below. If you join my free Discord, you get access to all of my courses. And one of the courses is called My Strategy. And there you can get a bunch more PDFs, including this one. And yeah, anyways, let me not get off track. Okay, what was I saying? All right. Yes, okay, once you get the retest of either this 50% line or the white line or the zone, and it continues to go in the direction that it broke out in, that's when I usually enter. Okay, and since this is a breakout trade, to me, and what I've experienced is the best time to take this type of trade is going to be the first 15 minutes of New York Open. Okay, meaning I can take this breakout trade all the way from 9:30 to 9:45. Around that time is like when I usually get the best trade. Which is crazy because in the beginning of the year, I actually was taking trades after the first 15 minutes of market open, and the reason I changed that was because usually the most volatile time is the first 15 minutes. And what was happening to me in the beginning of the year is I would miss the breakout because I was waiting for the first 15 minutes. So that's just how my trading has changed, and it's been way better. Like even today, right? If you looked at the markets today, the first 15 minutes were beautiful, and then it just kind of ranged from there. And you'll see that very often, especially towards the end of the year where the holidays are. But anyways, this is an example here of a breakout trade for the shorts, right? So as you can see here, we had some sort of demand zone, right? That's what this gray zone here is. Is it gray? Let me see. Okay, it is. And you can see here, it looks like as soon as 9:30 opened up, immediately you saw a 1 minute candle close below this 50% line. Then I would say about 1 to 2 minutes later, the next candle opens up, it comes back to retest this 50% area, and then it comes back down. Now, all of these trade examples that I'm going to show are real trades. Some of them are going to have this thing here that says 1 minute TF. What that means is just 1 minute time frame. It doesn't mean anything else, don't worry. But yeah, for this example, like I said, the 1 minute candle closed below 50%, then price came back up to retest that area and rejected it, and that's why I went short. And as you can see also, it happened right at 9:30. You could clearly see it in the candlesticks right here, right? Like before 9:30, the candlesticks were closing pretty tiny, pretty small, low volume. Then once the market opens up, you get huge candles and more volume, which is what I want to see. Another example of this breakout trade for the shorts setup is this right here. This was an actual trade recap that I posted this year, and this is the thumbnail for the video. I just took it, and you can clearly see right here. You see this. I'm pretty sure this is a 5 minute time frame, but you can clearly see it. Boom, 5 minute candle closes below this area here that the market previously bounced off of right here. We close below the 50% line. Next candle opens up, it retests that 50% line to the tick, and then it breaks the lows. That's when I took the entry. Stop loss was right above this wick here, or right above this 50% line, and I just targeted a 1 to 2. And I'm not gonna lie, I think I put this up first because it's actually my favorite setup. I know it's bad to have like a favorite setup, but I feel like most of these trades that I've had a short breakout, they just play out the best. But that's just my experience. Anyways, another example of this breakout trade is a breakout to the longs, which happens a lot. Again, it happens a lot, 9:30 to 10 a.m. Eastern. First 30, 15 minutes of market open. Anyways, boom. You can clearly see here, and I zoomed in on it. Right here, you have a 1 minute candle close above these 50% lines. Boom, we broke past all these zones here. And then once this 1 minute candle closed on the 1 minute time frame, um, the next candle opens up. It comes back to retest that white line there, and then it breaks these highs here, and you can see that's when my entry was. I just targeted a 122, and like that was it, you know. And then right here, I set it. 1 minute candlesticks kept closing above multiple 50% lines. And then I told you guys when I entered, boom, right off the retest. And yeah, another example of this breakout trade for the longs is, and this is kind of more explained here, is really just the same thing. It's very repetitive. And it's also a reason why I stopped doing trade recaps, because I just felt like I was repeating myself all of the time. And I was recently thinking, like, why did I stop doing the trade recaps? Because they felt repetitive. If that's kind of the point of trading, is to do the same thing every single day. So with that being said, I feel like I'm going to start to do more trade recaps, even though it's going to seem repetitive. That's just the point, right? A huge point of trading is repeating the same shit every day, unfortunately. And it works. And once you repeat the same thing every day, you start to get better at it. Right? But, anyways, boom. This candle here, 5 minute candle closed above 50%. Next candle opens up, it pulls back, retests the 50% area, and it bounces from it. You can see here once it broke this wick here, I entered and then I targeted the next area of interest, which could be a white line, right, which is support and resistance, or it could be another supply and demand zone, which in this case it was another supply zone. But most of the time I just target a 1 to 2 unless there's really good volume, the trade's moving fast, then I try to get like a 1 to 3. um but yeah, this is my main setup here. This is what I call the breakout trade, right? um but since I am a supply and demand trader, sometimes you don't get a breakout, right? Sometimes it actually respects the supply zone, then it sells off from there. And that's what I call regular supply and demand. I guess you could call it a reversal, and it's also the opposite of a breakout trade. In the beginning of this year, I was just looking for breakout trades, and the issue with that is a lot of the days where the market has lower volume, you don't see a breakout. What you usually see is the market tap into a supply and demand area and then it comes back into that range. And that's when I like to take these trades. But, anyways, let's read this here. It says, when the market taps into a supply zone and price rejects it, then it moves down. Or when the market taps into a demand zone and it bounces off of it, moving up. The way I enter this trade is usually on the 1 minute time frame, and I wait for the market to tap into a zone. Then, if the candlestick closes out rejecting the zone and breaking structure, then I take the trade. And I personally think the best time to take these trades are the first hour of New York Open. Now, notice how I said the first hour over here. And back here for a breakout, I said the first 15 minutes. And that's on purpose because usually the breakout on New York session happens very quickly because you need uh really good volume, and if there's really good volume it happens really fast, right? Where in this case I said the first hour because usually when I take this trade there's lower volume, and if there's lower volume then the market is moving slower. Okay. What else here? This type of trade best plays out on choppy ranging days or on days where the market has lower volume. An example of a supply zone trade for the shorts is this right here. This is actually a real trade recap that I posted this year. And you can see, boom, right as the market opens up. Uh, Let me zoom in on this so you guys can see what I'm talking about here. Market opens up, and honestly, you can't even tell it opened up, right? Like the candlesticks are very similar to the pre-market. They're very small, at least in the beginning, because eventually they did start to get bigger with more volume. But in the beginning, the candlesticks were actually lower volume. And once the market tapped into the supply zone here, boom, you can immediately see the candlestick starting to reject the zone, right? They're closing with wicks rejecting the zone, and then immediately you see a break of structure to the downside. And that's usually when I enter the trade, and that's what I did this time here. And yeah, over here it just says what I said, right? Another example of this type of trade is a demand zone trade for the longs. It's literally this, but the opposite direction, right? If you zoom in here, you can see, let's zoom in. On the 5 minute time frame, this is how it looks. It looks like it happened very, very quickly, right? We have a 5 minute candle that tapped the zone and then immediately it closed out rejecting the zone. On the 1 minute time frame though, you can see the market taps into the zone and then immediately you see the break of structure to the upside right there. And that could have been where my entry was, but I'm pretty sure this day my entry was around this area here. A tiny bit late, but still played out pretty well. So Let me zoom out. So for this trade, right, as soon as the market tapped into the demand zone on the 1 minute time frame, the candlesticks closed out, rejecting the zone and breaking structure to the upside. All right, the next type of trade I like to take is what I call a continuation trade, which in reality is a late entry trade. So sometimes I like to wait for extra confirmation, or sometimes the move happens too quick and I miss the perfect entry, which is uh usually my perfect entry is like very close to the zone, right? So when this happens, I expect the market to continue in the direction in which the market either broke out of or the market reacted off of, right? So when I take these late entries, the A plus setup has already happened, right? So usually it'll be after a retest, right? So that's also like me waiting for extra confirmation. Or sometimes again it just happens too quickly. Which with Nasdaq happens very often. It moves very fast. So I do tend to take this trade a lot, and it does play out, right? Especially if there's really good volume in the market. And an example of this continuation trade would be today's trade. This is the trade I actually took today on some funded accounts. And the market was already bouncing off of a 3 hour demand zone before New York opened up, right? So I wanted to wait for extra confirmation once the market actually opened up. So after the 5 minute candle closed after 9:30, so this is around 9:35, the market opened up. We have that first 5 minute candle close. It closed out bouncing off of the 3 hour demand zone, and my confirmation to get into these longs were a 1 minute and 5 minute candle close above the white line. And then the next candle opened up, it retested the white line, and then it bounced off of it again. Right? So if you don't know what I'm talking about, I'm gonna zoom in. Don't worry. Boom, right here. So the market opened up at this big wicked candle. This was at 9:30 here, this candle here. And you could see this pre-market price action here was already rejecting this demand zone. So once I saw that, I did want to take longs, but I also wanted to wait for extra confirmation, which is why I didn't take the longs yet, right? And then my confirmation was this 5 minute candle closing above this white line here, which I zoomed in on right here. You can see, boom, you have a clean 1 minute candle close. And then to the tick, literally to the tick, next candle opens up, retests the white line, and then it breaks these highs right here. And that's exactly when I took longs. And it's crazy too because it was a trade that if you didn't get in, when you were supposed to. It's like a millisecond thing. You know, if you don't get in at the right second, you can miss out on the whole move. So it's really a thing of milliseconds with trading. Um, so even though this was like a really clean setup, I would count this as a late entry trade or a continuation trade, right? Because usually my entry would have been down here closer to this 50% line, right? Especially on the 1 minute time frame, you can see the market opened up at 9:30. We kept wicking off of this area here, and then we broke structure to the upside. So my entry technically could have been a bit lower, and that would have been fine. But again, sometimes I do want to wait for extra confirmation, like today's case. But yeah, these are my main setups. This is what I'm gonna be taking every single day on the YouTube live stream. And whenever someone says, oh, what type of setup do you take? I'm gonna send them straight to this video because this explains everything very detailed. Okay, but anyways, just because I'm gonna be live trading on YouTube does not mean like the point of the live trading on YouTube is to show you guys like I'm the best trader in the world, or I have the best trading strategy, because that's literally not the case. Yes, I get payouts from trading from prop firms, but I don't think I'm like an insane day trader. Like I think I'm going to lose a lot on these live streams. I'm going to win a lot on these live streams. There's a 50% chance of me winning or me losing, and that's how I'm approaching these live streams. The point of the live streams is just to show you guys my process. That's literally it, right? And these are the main rules that I'm going to be following on these live streams. And these are the rules that I followed the whole year. Maybe 1 to 3 oh my god, what am I saying? Maybe like 1 to 3 days, I broke a rule and it was fine. But these are like my main rules. And all of these rules help me do all of these things, right? They help me not overtrade, not get greedy, and they help me focus on quality over quantity, and especially manage risk properly, right? So, my rule number one is I only trade New York Open. And why do I do this? Because my best setup happens New York Open. That's when there is the most volume. So this helps me focus on quality over quantity. It helps me focus on the quality of the trade. I've tried to be the trader that trades like every session. I tried to be, on the grind with trading, but it just didn't work for me. So now I just stick to New York. And honestly, if I do ever trade, Asian session or London, I think the trade that it would actually be is like, like a swing trade, something that I could hold overnight. I wouldn't try to scalp during Asian or London session. It just hasn't worked out for me. All right, but rule number two is going to be 3 to 4 trades max per day. Usually, I would say 99% of the time, I take 3 trades max. Because if I took 3 trades max, most of the time it was either like one break even and 2 losses. But damn, I should have added another rule, because one of my main rules is if I take 2 losses in a row, full size, then I'm gonna call it a day. And to me, it's just like if I take 2 losses in a row with full size, then they were trades that I fully trusted in and they didn't play out. So either I'm not reading the market right, or the market isn't in my favor, which happens very often, unfortunately, especially when I'm on a losing streak, which you guys are also going to be able to see that on the YouTube live streams. Unfortunately, for example, like this year, I went through, I think it was 3 or 4 losing streaks, and they were fine, right? But now I'm going to be showing you guys the losing streaks in real time. And I think, unfortunately, I think there's going to be people saying, oh, why didn't you do this? Why didn't you do that? But my answer is always going to be I followed my rules and it was an A plus setup for me. A plus setup does not mean I have an 80% win rate, unfortunately. A plus setup to me means something that I've seen every single day, almost, and something that I truly trust in, and it's easy for me to understand, right? But, anyways, rule three is, and a lot of you are not gonna like this, but I actually love this rule, is if I take a winning trade when I'm done, what am I saying? If I take a winning trade, then I'm done trading for the day, right? Very rarely would I take another trade after a winning trade. For example, today's trade. This was the first trade I took, and it was also the last. Why? Because it was a really good win. And what this rule allows me to do is this helps me not get greedy, which is huge. This year, I had a day where I took a full win. It was like very clean win. And then I was like, oh, like the market's moving clean. Like, let me take another trade. I'm snapping right here. And what I ended up doing was I ended up over trading, and in reality that was just me getting greedy. So that this is that's a main reason to why I have this rule, is to avoid greed. Another reason why I have this rule is to not turn a green day into a red one, right? We all know the feeling of being green and then turning red. It's when you're green on the day and you end up being red, your first thought is going to be, I need to make this money back. So let me keep trading. I've been there, I've done that, and it's just not worth it. So that's why I just, after my first win, like, I'm going to call it a day. Um, and, now that I think about it, especially for about 6 months now, I've been trading literally for like 30 minutes out of the day. Not joking. Like I start charting around 9:15, and then usually I'm done before 10 a.m. Or I'm not joking, like sometimes I'll be done at 9:35. Like I'm very quick with the trade. And now that I think about it, if I take my first win within the first 15 minutes of market open, I'm most likely gonna like be chilling out, just talking to you guys on stream. I'm not gonna be looking for another trade because my A plus setup already showed up. You get what I'm saying? So if you're gonna be watching my streams uh for signals or something, I don't think you're gonna like it. If I get one winning trade, that's gonna be it for the day. I'm not gonna be trying to get like a huge day. That's just not me, you know? There are some traders that succeed that way, but me personally, it's not me. I'm a very not slow person, but I like to think of like the turtle always wins the race, like slow and steady, slow and consistent. That's how I like trading. Okay, so if you like that, or if you want to be that way, then come watch my stream. It's going to be a very calm, chill stream. I don't think I'm going to be hyped up every day to trade. It's going to be a very calm trading stream. Unless I get like a huge day, then it's going to be a party, but that's going to be very rare. Not going to lie. All right, rule number 4 is break even at 1 to 1 unless the break even stop doesn't make sense. Now, what I mean by this is once I get in a trade and I hit a 1 to 1, so once I get in a trade and I'm up what I'm risking, then my stop loss is most of the time going to go to break even. And I really like to do this when the market is really volatile. And the reason I do this is because it helps me manage risk better. But I have had multiple trades. Sorry, I had a little burp. My bad. I've had a lot of not issues, but I've had a lot of trades where the trade would have been literally perfect if I didn't break even. And I feel like that's 50% of the time, right? Like sometimes the break even does save me money, but a lot of the time, what it feels like is I break even and I get stopped about break even, and the trade ends up playing out in my way. So that's why I'm allowing myself to, if the stop loss at break even doesn't make sense, like maybe the stop loss is going to be at just a random spot where it just wouldn't make sense, then I'm going to allow myself to let the trade breathe. And that's something that I didn't do this year, but I think is actually going to be helpful for me next year. I don't know. We'll see. We'll see. That's why we're tracking data. That's why we're journaling. Anyways, rule number 5 is, it's a really good one. It's a really fun one. If the market is slow and choppy, do not trade it. If the market is is not in my, that's basically what it's saying. If the market is not in my favor, I'm not going to trade it. And a lot of the time, this does happen when I don't have any supply and demand close to price. It happens, it doesn't happen very often, but it does happen sometimes. And when it does happen, unfortunately, it's just a day where I don't have to take a trade. My A plus setup is most likely not going to show up on a slow and choppy day. So, the reason I have this rule, of course, is just because this helps me focus on quality versus quantity. And I had a lot of no trading days this year, and I was still able to make a good amount of money with prop firms. So I promise you, you don't need to trade every day to make money. And like I said in the Instagram post, I just said you don't get paid for the time that you spend on the charts. You get paid for the decisions you make on the charts. So with that being said, guys, that was it for today's video. If you guys want this PDF, you could join the free Discord down below. If you want to work one on one with me, what I have right now is a 30-day program focused on execution, trading psychology, and accountability. If you're interested in that, the link is also below. But I love you guys, and thank you guys for watching.